All right, 11:01. That seems good enough. Hello, everyone. Happy Friday. We're doing it. We made it another Friday. I'm once again going to take credit for the green screen. So I thought I'd give you a couple of thoughts about how I thought these would continue as we roll through the weeks here. And of course, I'm open to feedback. So if we're going to continue with the Tuesday-Friday cycle, I think what we're going to try to do is Friday, I'll give a snug, call it 5 to 7 minute synopsis of the market week and kind of interesting things things we think are interesting that we're paying attention to. And then Tuesday, perhaps a slightly longer version with a guest of some kind. Of course, predominantly going to be Mirador people cycling through, but I've also thought about maybe inviting some other non-Mirador people, subject matter experts of one kind or another, depending on what's happening. Could be a tax person or an estate person or a community person, depending on what's happening. And we'll continue this on as long as people find it useful. I seem to be getting good feedback, and so we're appreciative that people are tuning in and forwarding it to their friends and finding it helpful in some way. So without further ado, another historic week here in the markets, right? So we had oil futures contracts go negative for the first time ever. So, in theory, what that means is that for all the trouble of getting the equipment to go drill oil and pull it out of the ground and have it as the raw material that, kind of fuels the economy, or at least did when everybody was working, you had to then go find somebody and then pay them to store that for you. So that's a very unusual condition. And so it's obviously, there's so many cross currents. And I referenced this literally a month ago when I was talking about the spasm in the markets where we were aware that there were, some levered hedge funds that were severely duressed and forced to sell positions. And in reality, that's in fact what happened in the oil markets this week, where, people who use leverage get so offsides and out of position that bizarre things happen. So brings me to the question I'm going to address, and then the interesting thing that we're paying attention to kind of going forward. A little bit of a shift in the narrative, in my opinion, and it's too soon to declare it a shift, but something that we're watching out for. So the question came from a client who retired beginning of this year. So no more paycheck, and here we go, off and running, taking on the world as a retiree, and then boom, global pandemic. So the question I got was, I'm going to be using my retirement account to fund my retirement. Should I be taking more out now than I was expecting to? How should I be thinking about that? So I thought, well, good. This is a good opportunity to talk about the construction. And of course, a lot of people on this, a lot of people who watch this are going to be invested in our long view strategy, certainly the cornerstone of what we do, which is a global allocation strategy. So as you know, stocks, bonds, cash, sometimes commodities, sometimes not, and hedged at certain periods, and certainly now is one of those periods. So what I wanted to point out is that when you look at the composition of that strategy, one of the things you ought to notice is that we have bonds maturing at the end of every year all the way out to 2024, the majority of which are high quality corporate bonds. So if you think about the relationship between risk and reward, it's very, it should be logical, where the more risk you're willing to endure, volatility, the more reward you should expect. So all the way on this side of the spectrum are the high-grade corporate bonds that mature, at the end of every year out to 2024. So that part of the portfolio has been undeterred or untraded throughout this period. And with the government backstop or announcing that they're purchasing those bonds, they've actually gone up a lot. So those are a part of the portfolio that is accounted for some of the good, positive things that have happened in the last month or so. So my answer is to suggest or say that the market will never hit another all-time high again is preposterous. It's absurd, right? We were at a new all-time high 6 weeks ago or 2 months ago now, and then a global pandemic, the likes of which we haven't seen in 100 years, took everybody off, caught everybody off guard, and here we are. Feels to me, certainly seems like things are stabilizing, and it brings me to my last observation, which I'll make, which is the risk-reward relationship, right? So if you think about stocks almost like a forest, the smaller trees are less strong, the bigger trees are more strong, but have less growth ahead in their future, right? Because as we've all heard, trees don't grow to the sky. So same is true for companies. And so the relationship between small companies and large companies is logical in a long context. Small companies grow faster, but are more vulnerable. So if you think about the time before fire departments, a lightning strike hits a tree in a forest, sets off a forest fire, it runs its course, devastation, and then renewal. The cycle starts anew, right? We've all heard about the sprig of flower that pops up through the forest floor, and then all of a sudden, 30, 40 years later, you've got another forest. So then we try to control the devastation because people live in the path of the fires, and we spend money to control, right? So the metaphor I'm drawing here is same with the pandemic. If we had done nothing, ravage, devastation, renewal. We opt rightfully, or in my opinion, rightfully, to alter the course through our behavior and take on costs and interrupt the flow. And so we do things like backstop corporate bonds and backstop high yield bonds and try to contain. So why I bring that up is since the February, when this was clear this was going to be something that was completely unknown in terms of its path, small stocks got hammered. Big stocks got hammered, but small stocks got hammered even more. So just in the last week, that has started to change. So small company stocks are starting to behave better in the last week than large company stocks. And now talking over 2 weeks, kind of about the same. So I'm not saying that is signaling that this is all over by any stretch, but in the laws of physics of investing, it has to be so that the small company stocks have room to grow and not be propped up, and a lot of them over the course of the last year have, because of low interest rates, haven't made money, haven't really been great businesses. That needs to be altered where they can once again be allowed to adapt and compete and grow faster than their larger counterparts, right? They get some sunlight through the big trees so that they can find their spot and their pathway forward. So I find that is going to be part of the solution of when we adjust positioning, when that trend has reestablished itself more in the natural order. And so I think it was quite logical and rational that they did get hit harder than big stocks, but now that relationship's starting to change. So too soon to declare victory, and not saying this is over by any stretch, but there are some signs definitely that some of the policies that have been put into place are having the desired effect of sort of starting to calm down the underlying level of vibration. So I find that to be quite hopeful, and I can say markets have, I think this will be the first down week in 3, certainly not been down for our clients. We've actually had a very good week. So grateful for that and hopeful it continues. So I think on Tuesday we will look to have a discussion between Jonathan and I, maybe go a little bit deeper. I think he's got some charts that he's going to share. And then if there's anybody you think I should be talking to or you want to hear from, send me a text or send me an email and I will reach out and try to get them involved in this discussion in some form or fashion. So as always, thank you to the Mirador team, incredible. And my son Scotty's here with me in the office, and thank you to him as well. I love you, pal. And thank you to all of you, and we will talk to you all soon.